Thanks for joining us for a quick update on the multi-asset process. So this past quarter initially saw a rally in local equity and local fixed interest assets. However, towards the middle of the month, we saw a political spat between the Americans, and us allowing Russian ports to dock on our shores lead to a significant sell-off in local fixed interest assets, as well as the rand depreciating to 1950 at the extreme. The impact on our funds, unsurprisingly, is that our offshore components have done surprisingly well, contributing significantly. Our strategic rand hedges have obviously detracted, and then we've lost out a little bit on our local bond and ILB exposure. In that context, there have been some minor changes in terms of our funds asset allocation. Obviously, with the depreciation in the rand, we would have trimmed back our offshore exposure in favor of local exposure, and then we would have topped up on our nominal bonds. The other significant change is that previously we were quite strongly positive on emerging market equity, given growth in China and that sort of thing. However, our view has now moderated, and therefore we've trimmed back our offshore emerging market exposure. Looking forward, that is obviously a significant change. However, for the remaining asset classes, local bonds, local ILBs, equity, our view is more moderate, so we prefer to stick at our strategic asset allocation. The one long-term underweight that we've held in the portfolio is offshore developed market equity, specifically given that we view the S&P as expensive from a valuation perspective, and you are moving into a tightening monetary environment, and therefore we continue to hold an underweight in that asset class. Currently, we retain our strong negative view on US equity, given that we view valuations in the US as expensive and the monetary environment is tightening. For the rest of the asset classes, we prefer to remain at benchmark weight, given that we don't have a significantly positive or negative view on local asset classes. As I mentioned previously, what we have done is rebalanced most of them towards the strategic asset allocation, which involved a trimming of the offshore exposure and topping up on local ILBs and local bonds.